about Goldman's call about the equity market? Don't
totally
like
agree
equities.
with it.
All right, so they
I
say
agree with
some
it because
commodities.
you're fighting the Fed now. Now, what needs to, my friend Matt Horween, who writes with me, we were going back and forth. You need to have an adult in the Fed come out and say, you know what, this digital economy is really changing what we can do with inflation. It's bringing prices down. The only real wage inflation is mandated by the government. We can't change that with rates. Gasoline, if you raise rates, then the energy producers that are at the margin will fold. That's going to boost the price of fuel, not take it down. And Medicare is completely in control by the government and the HMOs. Nothing the Fed does can impact those. And then the worst of all is rents. If you raise rates, it's even less likely that someone will gravitate from an apartment that's rented to a home. So we're setting us up for a worst of all possible worlds, where if they raise rates, the economy will slow, and we'll get a repeat of December to Feb 10. I mean, that's okay. That's what should happen. If the Fed people understand that their words may not be correct, that won't happen. But right now we're setting up for a repeat, and you have to watch what these Fed governors say, because they could really, really hurt the market, especially because the dollar will go higher, which had been one of the themes that was working since Feb 10, the dollar going down. So you reverse everything that happened from Feb 10 till now, and that brings you back a lot. I suggest that people read Bruce Cambridge. He is the real money technician. To be as right as rain as this guy is extraordinary. But you can see the levels of where things could go if the Fed doesn't shut up. And it is Fed dependent, by the way. If the Fed were to say, listen, we see a lot of trends in the economy and we are uncertain, then we could make a stand at some price. But there's no stand that can be made if they're one saying that they need to have 3 rate hikes. There's no stand that can be made.
Is there some safe haven place to be in terms of equities in light of this?
Well, I think gold. But gold gets hurt if you finally get a return by having cash. So you got to be careful, gold. But I like Rand gold. Technology that can outrun the slowdown in growth that the Fed would cause will do well. That's always been a great place to be. Drugs that can outrun the Fed, great place to be. But that's a small group of stocks. Very interesting. Bob Lang did a piece last night. We did it on off the charts about a particular bull market that could work, which is animals. And now it's very niche, but you can read his piece, and it's very, very good. I am negative if the Fed keeps talking, because what they want to do will not solve the problem. The government wants higher wages, and the Fed wants lower wages, and the government's going to prevail.